What's up, ladies and gentlemen? Welcome to the Noble Edge Trading YouTube channel. I'm your mentor, Louis. I'm with your mentor here, K Doc. So we have come to the conclusion that instead of using Michael Jordan's voice as voiceovers, we would instead use our own God-given talent. So yeah, let's get into it. So we will be looking at the one-shot kill model. The first thing we'll be looking at is the weekly expansion range. We have to determine or identify the most probable direction to which the next or present weekly candle will expand. The next thing we'll look at is the day of the week. We have to expect the high or low of the week to form on either Monday, Tuesday, or Wednesday in order to frame a probable setup. Thirdly, we have to look at inefficiency and liquidity runs. We will be using liquidity gaps and liquidity pools to determine entry points in the direction of the predetermined weekly expansion. Let's get into the chart. So on weekly time frame, we have an order block over here. Just see, yes, we have an order block over there. So before the start of this week, we had this candle over here touching the order block. So two things could have happened. Firstly, we could have had an expansion to the upside, meaning that if that happened, then we'd have a change of direction. Another thing that could have happened is that the market could have simply bought after opening on Monday and then sold for the rest of the week. Now let's jump to the daily time frame. So we have to show that Monday open over here and it bought. Remember, we don't trade on Mondays. Those are the rules by the one and only ICT, where we got all this training and information from. Right, then on the daily time frame, Monday bought. Remember, we should expect that the low or high of the week would form on either Monday, Tuesday, or Wednesday. Those are the anchor points. So when we jump to the 1 hour time frame, we can see that Monday over here it closed. Where is midnight open price for Tuesday? Here. So Monday traded up, and then during the London session on Tuesday, we had a market structure shift to the downside. No, it's a market structure shift. Right. It displays to the downside. Then we had a fair value gap over here, but we also have a order block over here. So using the order block. Now, why am I using the order block? I'm using the order block because it is above the equilibrium of the range from the top to the bottom. Right. So on Tuesday was that's it. On Tuesday the market opened 12 a.m. New York time. It sold, but because remember on Tuesday there was an event. It was CPI, if I remember correctly. It was CPI. After it was Wednesday. So the event it sold and then bought again to our order block, which was formed on Monday. Right, so our one shot one shot, one kill model says we should expect the high or low or anchor points to form on either Monday, Tuesday, or Wednesday. So on Monday it bought, on Tuesday it formed our order block plus fair value gap, and then on Wednesday it came back to our order block. That's where we were expecting to have an entry to the downside. Now our targets are either 50 pips to 75 pips. On a lucky week, then we would hit possibly 100 pips. That is exactly what happened the previous week.